Okay, now we are on chapter 4, and this kind of wraps up the accounting cycle. We're going to look at 5 different objectives here. One is the flow of accounting information, then preparing the statements from the adjusted balance, and then preparing the closing entries and describing the accounting cycle. And then we'll have a short overview of all of that. But right now, in this video, we're going to look at, there's 2 others. We'll cover these 2, the fiscal year and the working capital. Sorry about that. And this one, we are going to look at the flow. And it's just really one slide that we're going to be looking at. But it gives you a really good overview of what we've been doing. First of all, we did an unadjusted trial balance, which was pulling off all of the account balances out of the general ledger. And we put them on a worksheet like this, on the debits and the credits, and it had to balance, and that was our purpose. We pull off an unadjusted trial balance. Then we looked at, oh my gosh, we don't have all of our revenues and all of our expenses for this period. And that's because we had accrued expenses, we had accrued income revenues, we had unearned revenues, we had depreciation. All of those expenses that weren't recorded during the period, we then had to call adjustments. And we put those on there on the worksheet and made entries for them, journal entries, put them on the general ledger, and then put them into here. And you'll see they balance. Then we added the adjustments, or modified the unadjusted trial balance to come up with an adjusted trial balance right here. And again, we pulled them off, and see that it balances. Now, what do we do with this stuff? Some pretty numbers, right? So what we end up doing is we're going to pull off the financial statements for this period now. Now, you have to pull it off in a particular order. You have to do the income statement first, and then the owner's equity statement, and finally, you'll have a balance sheet. So, to do this, let's pull off all of the income accounts, the income statement accounts, which are the fees and the expenses. And you'll notice we end up with a net income of, it looks like, $7,105. Well, then that gets transferred to your next statement, which is the owner's equity statement. So, and the owner's equity statement involves the beginning balance of the capital account, equity account. We add the net income, and we subtract the owner's withdrawals. And that comes to $28,105. And you see your capital accounts here? These are the 2 accounts involved in that. Now, this number is then used to complete the balance sheet. And that would be all of these plus these 2 adjusted. So now, which is the net of the statement of owner's equity. So now you have a balance sheet. So you have to do income statement, then the owner's equity, and then the balance sheet. And that's kind of the flow of how things go. And I think next up we're going to look at closing entries, but this gets you to the point where you can pull off the statements that you need for the period. Thank you.